Good morning. Let's get straight to markets.
Take a look at the impact for the indices.
Factual. Succinct. All you need to know before your trading day starts. Subscribe to our newsletter, CNBC's Daily Open.
Welcome to Beyond the Valley, a CNBC Tech podcast with Arjun Kharpal and Tom Chitty.
Beyond the Valley.
For many of us, the way we pay for things, how we bank and what we invest in has changed dramatically in the last several years. Much of it because of financial technology, or FinTech. Arjun is at Money 2020 this week, one of the world's biggest FinTech events, to find out what the industry's leading companies are planning next for the delivery of financial services.
Beyond the Valley.
How is Amsterdam?
Yeah, it's good. Tom, Money 2020 is an event that I've been coming to for quite a few years. Used to be in Copenhagen, actually, now in Amsterdam. And they've got a beach club. They've got a beach club at the event. And at the beach club are some deck chairs and pedalos, those boats that you can sit in and pedal around a lake. So it's very, very tech. They serve beer at like 2, and wines at like 2. One of the stands was doing cocktails.
Is this indoors?
No, the beach club is the outdoor space of this massive conference venue, which if you've ever been to a massive conference, often you're sort of stuck in this giant warehouse type of thing. So they have this nice outdoor area you can just kind of sit in with there's some sand on it. It's called the Money Beach Club or something.
Are people getting their shorts and their swimsuits on?
Not quite. They're still in, their shirts and chinos, trousers and whatnot, just chilling. But it's a good meeting space, because it's outdoors and, the sun's out in Amsterdam as we're recording this. You've got me trapped indoors, unfortunately, to record this. So I could be at the beach club, Tom, quite frankly.
I'm sorry, Arjun.
But I'm recording the pod here. You're dedicated to the cause.
Well, we're going to find out more about Money 2020 in a bit. Now, if you haven't already, you can subscribe to the Beyond the Valley weekly newsletter. Head to cnbc.com/Beyond the Valley, click on the subscribe button, and you'll get a newsletter every Friday with all the best international tech stories from Arjun and the rest of our CNBC team. Arjun, this episode is about a vast industry, but we can't cover it all. The plan is to do some future episodes which are going to go into a little bit more depth into some of the key stories around FinTech. But we're giving the opportunity for our listeners to request a particular topic for us to cover. So you can do that by emailing us at beyondthevalley@cnbc.com. We have done a past episode which was based off one email. So we do read them, we do listen to what you have to say, and we will potentially do a whole podcast based off of your emails. So that would be great. Before we get back to our main story covering all things FinTech, we've got to hear Arjun's stat of the week, which is
$573 billion.
$573 billion. Brilliant. Arjun, at Money 2020, what has been the key topic that people have been talking about this week?
It's hard to pick out one, but I'll give you a sort of splattering of them and you can tell me what you want to dig into. There's a term called embedded finance, which has been a big theme here and has been in the FinTech world for a while. Hate the term. Again, another jargon term we don't like, but there's that. I've been learning a lot about certain emerging markets and some of the trends happening in those emerging markets, places like Nigeria, India, for example, countries in South America, which has been interesting. I think the narrative of FinTech via the big banks has been big. And of course, AI can't go anywhere these days without hearing that. And finally, crypto is back, maybe. That's the other part of this as well.
I saw this morning you had an interview with the founder or head of OKX, the crypto exchange, a second largest crypto exchange, I think. Is that right?
Yeah, I think so. Second or third. They're up there. It changes all the time. But they're one of the world's biggest.
Lots of good topics for us to to discuss. Let's then start with embedded finance. I have to be honest, never heard of it, or at least I try to avoid a term that is as dull as embedded finance. I have looked into it a little bit. It's a sort of variety of ways that financial services are being offered by non-financial offerings. Is that right?
Yeah. I think first thing, remember last episode where we were going to come up with a better term for the Internet of Bodies? We haven't quite cracked that yet. Let's see if we can sort this term out, embedded finance, come up with something new. But yeah, it's exactly what you said. It's the integration effectively of financial services into non-financial offerings. So let's give an example. Let's say you're buying a subscription in an app to an app or service that you like. You can pay for that quite often now without being transferred to a payment site or a bank. And that's happening more and more. Now, all of that effectively is technology behind the scenes. So, financial services are embedded in what you're doing, a non-financial services app, because, maybe you're buying a music streaming service, maybe you're buying a gym subscription, whatever it might be. Those are not financial offerings, but they're able to offer financial services inside their app, which are powered by a lot of these fintech firms. Other examples might be lending, buy now, pay later. When you have those on websites, currency exchange, identity verification, all of those are sort of powered by financial technology companies. Now, just to give you a sense of this market, embedded finance is forecast to be worth about $228 billion by 2028. So in the not so distant future, that's according to Juniper research. So it gives you a sense of the size and scale of this part of the fintech market.
I mean, who's driving this push to more embedded finance? Is it the financial firms behind the technology itself, or is it online banks, the likes of Monzo, Revolut, companies that have emerged over the last several years?
I think it's a bit of both. I think as in many countries, we expect online services to be easy, right? We expect them to be pretty seamless. So I think clearly there's a demand from the user, from the consumer, that, if I'm going to pay for something, I just want this to be quick. I want to go in there. I don't want to, mess around with putting in numbers. I just want it to all be seamless. And I think, firstly, it started with that desire from the consumer for a better online experience, particularly as we're doing more and more and more online. Then you've got the services. Like if you've got, I don't know about you, if I've gone on a website before, and I've had a terrible experience trying to check out an item to buy it, I might not buy that item from there in the end. I might never come back to that place. So then it's in the interest of those service providers, whether you're buying a piece of furniture, whether you're buying something from any kind of e-commerce site, it's in their interest that experience is good for their sales, but also so you come back and continue to shop with their service. And then I think finally, it's the fact that, these fintech firms are now enabling these services to happen separately. They're powering a lot of these services. So the technology is there, the demand is there, the consumer want it is there. And I think those things are marrying up now.
All right, that's a nice introduction in embedded finance. I'm sure we'll talk about that more in future episodes. Let's talk a little bit about emerging markets, because when it comes to fintech, I feel like many of those developing economies have led the way when it comes to fintech, have been sort of ahead of many developed nations in how easy and simple and widespread online payments have been able to be processed.
Yeah, I think you look at China, some would say it's not really an emerging market anymore, but it once was. And, you could argue that they were the world leaders for a long time when it came to mobile payments with WeChat Pay and Alipay. And that's because I think the reality is, when you live in a place like the UK, like the rest of Europe, like the US, you kind of get privileged with a lot of this technology and banking systems that have been established for a long, long time. And so, when you're in the UK, for example, having a bank account is not really an issue, right? It's something that most people have, and that's established. But that's not always the case around the world. There's people in so many different continents around the world that actually don't have access to traditional financial services. And that's where these innovations happen on mobile payments, on technology, to bring in more people, what they call, financial inclusion, to bring in more people into established financial services. And so that's something that's been really interesting on the consumer front. But also, there are a number of B2B, business to business kind of companies, which are focused on certain markets. So I met up with the CEO of a company called Flutterwave today, actually, and we had a conversation. And they're focused on the Africa market, and effectively what they're helping is international businesses to process payments. So, for example, they said some of their clients include Uber, for example. So if you're Uber in operating in an African country, there's many countries in Africa, many different currencies, very many different regulatory environments. It's very difficult to use one of your US or European payment processors to figure out how to move money and pay drivers and move money back to the US too. If you're an American company, same likewise if you're a European company. And so you've got a company like Flutterwave that understands the market and knows how to figure all of that out. And they help Uber to do a lot of that payments process. And so you're seeing a lot of localized players around the world in many emerging markets, from everything from payments, consumer payments, to buy now, pay later, lending, to payments processing, all of that back-end technology, because they understand the market. They know the local rules, regulations, the currencies, have built the infrastructure to do that. And that was one of the sort of big learnings I've taken away from Money 2020, that actually there's the emerging markets is where many emerging markets, it's hard to lump them all together, but there's many countries, many regions around the world, particularly the continent of Africa, particularly countries in South America, that are seeing rapid growth in financial technology because the demand is there. There's a population that wants mobile and tech-focused services. There's companies and entrepreneurs popping up to service that. And there's businesses that want to do business in these fast-growing places, but need local FinTech companies to help them in areas like payments, for example.
These companies that you're speaking to, has this rapid growth in online financial services cultivated a sort of startup culture? Are they using a lot of the emerging companies, or are some of the more established players piling in? What's the sort of outlook look like?
No, I think these companies. So one of them I said Flutterwave, another one is MoneyPoint, operating in Africa as well. I met an Ecuadorian company called Kushki, which is also around payments processing as well. And their play is all about localization, about understanding the markets they're operating in. But they are enabling all like businesses of all sizes to do these and be a bit more tech focused. So there is a push from the businesses to want to be tech focused. They know they need to meet their customers and expand that. Technology can help them grow. But the consumers, the people out there, they want this stuff. They want more tech-focused solution. Many of these countries in the emerging markets have young populations willing to with smartphones, willing to try out these new technologies. And so again, the demand is there as well.
I mean, we talk about emerging markets. India, for one, with Paytm, that payment service has been a huge success. I mean, even in hugely rural areas, which are far away from cities, people are still able to buy and sell goods using their smartphones.
Yeah. And even in India, I mean, under the government or the government of Narendra Modi, they try to wipe out a lot of cash usage. And in 2016, India launched this unified payments interface, or UPI, which is this national payments infrastructure. And we should definitely do an episode exploring this a bit more. But that's also something where on a government level, they've built a national payments infrastructure to push digital payments, because they know people in rural areas may not have access to these digital services. But if they do, that could really help boost the economy. That's what a lot of people are saying. I think one thing I'll note as well is I wanted to just bring this emerging markets theme up because there's so many different countries we could dig into and how fintech's working there. But even, I mean, if you think about Europe as well, it can be maybe less so these days, but in the past it has been quite fragmented. So, the UK, for example, I would say early adopters of consumer fintech. So all of these digital only banks that popped up, a lot of them out of the UK, and all of the fact that I feel like they had a big audience and people use them. People use companies like Starling, like Monzo, like all of these other, and then innovations like fast payments and banks transfers have been quite easy in the UK for some times, and contactless payments are everywhere. Right, that's just the thing now. You go in the London Underground, you just tap your debit card. I went to France recently, and I had to line up at a machine to buy a paper ticket to use the metro. So it's not this kind of ubiquitous fintech utopia across Europe by any means. And same in the US. I would say contactless wasn't a thing for a long time. Chip and pin wasn't a thing for a long time in the US.
I mean, you still
right?
had to sign. Your bill, your check, and I think in some cases you still have to do that. They still want a signature.
Yeah, and to your point, I think when you say some of the innovation is happening in the emerging markets, it really has.
Let's talk a little bit about the big banks versus the likes of Monzo, Revolut, Starling that we've mentioned, and many others. The big banks are still there, people still banking with them, and they've actually developed a lot of the financial, the online services that these companies brought to market.
Ambition to me is about doing better.
I think ambition creates a pathway.
The best advice I can give to someone starting off a career is don't have a career, have lots of careers, try loads of different things.
Talk to people and put your ambition out there.
I don't feel that I've hit peak ambition because it's a learning journey.
CNBC is where ambition meets opportunity. What does living ambitiously mean to you? Hear it from our CNBC anchors, reporters, and global business leaders on CNBC.com.
Where are we at in that sort of battle for customers?
When I was at Money 2020 a few years ago, there was a sort of narrative that these challenger banks were gonna wipe out the big banks, and they're too old, they're too archaic, they're not gonna survive in this world of technology. Now, that clearly hasn't happened, right? That still the big banks are there. They're still big. They still have a lot of customers. But clearly, these challenger banks, or neobanks as they often like to be called, have forced these big banks to look inside themselves and realize that they needed to innovate quickly. Now, if you look at the established banks these days in the UK, they all have quite snazzy apps, and they've caught up on all that fun interface. But the question is, how are they in terms of their infrastructure from a tech perspective? Now, at Money 2020, I was on stage with Raman Bhatia. He is the incoming CEO of Starling. And we were having this discussion about the big banks versus the challenger banks. And in particular, I asked him about the differentiator between the big banks and the small banks now. And here's what he had to say.
This Money 2020, could be aptly relabeled AI 2020. I think the buzz around AI seems very infectious. And I remember doing a panel on AI almost 10 years ago around Gen AI. And I remain very optimistic about embracing the possibilities of AI across the banking enterprise. That said, there are management consulting shops who will go to traditional banks and will pitch them this AI banking model, the ability to leapfrog into this wonderful, personal, salient, contextual world of AI-powered banking. If you've not addressed your core data models and backend systems, you can absolutely forget that.
So his point really was about, he was kind of saying, effectively, the big banks don't have the tech infrastructure. It's all old still. So even if they're bringing out these snazzy apps, they're working on an old technology infrastructure that needs updating, etc. So that was his view. And obviously he is from a challenger bank. I did have a chance to catch up with Marnix van Stiphout, who is the COO of ING. Now, this, of course, is an established Dutch lender, and I asked him how he would respond to some of the comments from the Starling CEO.
I think ING is a digital bank, so just to be sure, we're not an incumbent as you know it. But yeah, we've got a lot of work to be done. Yes, we have been around for a long time. I really think that with all that we do on AI and Gen AI, we can maybe leapfrog some of the problems that we had previously. But still, we are far more digital than you probably think we are, and that's going to be a benefit to us. Already is, and will be even more.
So he said, look, we're working on it. We're doing, he said, I wouldn't call us a traditional or an established bank. He goes, we're focusing a lot on technology. And clearly, I think the big thing, as I said, is that the big banks have forced the fintechs even have forced the big banks to really accelerate their investment in technology because they know they need to catch up and they know that their users want tech-focused and snazzy products.
When we talk about these neobanks, they are contending at the moment with a slowdown in investment and offering incentives for new customers to bank with them. I suppose it will be left to the economy to determine how they get along over the next year and a bit. There seems to me, as a consumer in the UK, as a person who uses banking services, that there are a lot of banks. Along with the traditional banks as well as the neobanks. Do you think that there's enough enough consumers to make it worthwhile to last the course?
Yeah, I mean it's a great question, Tom. I mean there's always that chance of consolidation right in the banking sector. There are a lot of banks. I mean I don't know about you. Do you use any of these sort of challenger banks? You don't have to name them, but do you use them?
Yeah, I'm probably not going to name them, but I do use one, and it's I use it particularly internationally when I'm traveling, and then I also have a traditional bank, and I don't think I'm unique in that sort of position where you sort of use one and the other. And you do you use any of these challenging banks?
Yeah, I mean I'm exactly the same as you. I've got 3 bank accounts. One is a traditional bank, and 2 are fintechs. And just like you, one of them is for going abroad and having cheap FX, and the second is a joint account with my wife that has a very good interface, so you can see what bills are coming out. But what I would consider my main account is still an established bank, and
that's not going to change anytime soon, is it? Really, because.
No. And I think that hits to the heart of it, right, is there is still, I think, and we're speaking to the UK context here, there is still perhaps this kind of fear almost of, hold on, am I going to put all my money into a bank with no branches and it's just an app? And I think there's still that sort of mental kind of, even though, they're regulated and exactly the same as the established banks, there's still that fear. And I think, a lot of these neobanks are trying to build out the propositions that make some of these other banks profitable, lending, mortgages, all this other stuff as well. So there's still the early days of these neobanks. But clearly, I think my question to them is, the big differentiator before, 3-4 years ago was they had a snazzy app, a cool interface, a bit like the apps you were used to on your phone. The big banks have caught up. What's the differentiator now?
Let's move on the discussion because we've talked about the broad sort of range of services that these neobanks are offering, one of which is cryptocurrency trading. Let's talk a little bit about crypto at Money 2020. How big was the presence? What were the discussions focused around?
Yeah, it was big because what's fascinating is I go to these tech conferences and the presence of crypto at these tech conferences is often mirrors what's happening at the markets. So when crypto is really badly down or it's a crypto winter, you often don't see the crypto folk around. They don't really want to talk. But then the markets are buoyant again. They've got some money and they pay to be at these conferences as well. And so there was certainly, we had OKX, one of the biggest crypto exchanges in attendance, Ripple, who we all know as well, was in attendance. There were a number of other sort of blockchain and crypto-focused companies in attendance as well. And that's basically because there's a lot of excitement right now. We did a whole episode earlier this year on the Bitcoin ETF. Markets are still quite buoyant. And the US has taken its first step to approving an ETF for the cryptocurrency Ether, which is getting people excited as well. And so the crypto industry right now is clearly very excited about the longer term prospects, that more investors are going to get into this space, that bigger investors, more established investors are going to go into the space. My question was, in this current cycle of Bitcoin, have we reached the peak? And that was a question I put to Hong Fang, who is the president of OKX. Here's what she had to say.
I personally don't think so. I think there is still tailwind for how long this cycle can go. The value proposition for Bitcoin is always there. The only difference this time is that the ETF is getting a lot more spotlight and support to that value proposition, and more institutional and retail customers are seeing that.
So she doesn't think that we're at the peak yet. There's more to come because of some of those reasons I laid out already. Okay,
last but not least, definitely not least, is artificial intelligence. What have you heard on the ground at Money 2020 about AI and generative AI, probably in particular?
Yeah, I think it was the Starling CEO said during my chat with him, Money 2020 should be renamed to AI 2020 because there was that much chat about it.
Not again.
Yeah. Not again. I know, not again. I think I'm sick of AI, I think. But, can't avoid it. Of course, everyone's talking about it, what to do. So this is the thing. These are the couple sort of things I've learned and gleaned from my couple of days here so far. What is the financial services industry using AI for? This answer may bore you, but this is the reality. Back-end productivity gains. So, workers doing tasks that can be automated with AI, improving almost as a co-pilot in the back. The idea is to improve productivity. So it's all stuff actually you don't really see. And it's all aimed for companies to get better productivity out their workers. But also, if you think about it, potentially this could be cost saving as well. If they're able to automate more tasks, that could save businesses costs. That will help their profitability and cost base potentially. So that's one thing. A lot of it's back end. Now, when it comes to consumer facing things from the financial service industry to do with AI, a lot of them are talking about chatbots, right? In customer services. So a chatbot that can answer more complex customer services queries. Don't know if you ever dealt with a current chatbot ever when you get asked for help online, but they are terrible.
Yeah. They're terrible.
Yeah.
They're terrible. And, this is something we spoke about at VivaTech is, there's a multitude of use cases that people are peddling, but what are the ones that are really could be useful and also useful now and could be implemented now? And, improving chatbots would definitely be one of them.
Do you do that thing where you don't even bother and you just write human or speak to human, speak to agent or something? I think I sort of hacked one of these chatbots and figured out the thing that I needed to write in that would get me to a human. And I think it was literally that, speak to agent. But
I'll just write something illegible, basically.
It's illegible.
And usually they're like, well, I don't understand, let's try and patch you through to someone who might, and I'm thinking, yeah, they probably still won't understand.
So you go for sort of the sort of confusing the chatbot sort of technique. Yeah,
and the people who develop these chatbots are probably thinking, great, this is just great.
Yeah, and they're trying to learn off the data that you're inputting all this gibberish to confuse them. And so they're probably, the AI is just getting more confused because you've screwed it up, basically.
Yeah, and making it worse. Yeah. So you've got one more day at Money 2020. You got anything exciting planned tomorrow?
Yeah, I am. Well, by the time people hear this, I might have already done it. But I'm interviewing Monica Long, the president of Ripple, on the main stage, at Money 2020. It's actually made that, so they got this stage. It's very hard to really see it, but they've got this stage made of shipping containers, a bit like if you live in London or you visit London, Box Park in Shoreditch and Wembley. So they've made this, and there's sort of an entrance. And they showed me before I arrived at Money 2020. I was getting really excited because I thought, oh, you know what, this is. It's a bit like a boxing entrance, wrestling entrance. I thought, well, I can have a theme song. I can walk out. Anyway, so I get prepared.
Dressing gown.
Yesterday. Yeah, dressing gown on. The gloves are on. I get prepared yesterday. I rock up to the stage for my talk, and they're like, "Oh no, you've got to go through this side curtain." I'm thinking, what's the point of that entrance then? So that was disappointing. But yeah, no, I'm gonna sort of wrap up, get back to London, and then what's next week? London Tech Week.
Oh, lovely segue. Yes, for our listeners, we are going to be at London Tech Week, where we'll be recording a podcast on Tuesday, the 11th of June. We will be at the CNBC stand doing that. So if you are
other marker for next week, Tom, our podcast Beyond the Valley is up for an award, and we're going to the awards ceremony
at the Podcast Publishers. I should probably get the name right. Podcast Publisher Awards. That's it. Best Tech Podcast. It's a big one. Yep. And fingers crossed. We're excited about that one. But whoever wins, will deserve it, and we'll be
absolutely
very grateful just to be nominated. So that's exciting. We got that on Wednesday evening. Before we finish, we have, of course, got to do Stat of the Week, which is
$573 billion, Tom.
$573 billion. You said $200 billion or something in the episode, so I don't think it's that. Yeah, you nearly threw me off.
I did that on purpose. I did that. I'm glad you picked it up. Very good.
So you spotted that. The expected value of the challenger banks in 2027.
It's not that, actually, Tom. It is the public FinTech company market cap at the end of 2023. Now, the reason I bring that up is because 2023, $573 billion. 2021, $1.3 trillion. The reason I bring that up is because I wanted to make the point that there's been a 55% decline in valuations of FinTech firms. A lot of them are payments firms. Now, a lot of the chat I've been having here is that why has this sort of FinTech bubble burst? Now, of course, if you compare to 2021, VCs were flush with cash. They were paying high valuations for a lot of these FinTech firms. And some of those valuations, the bubbles burst on some of them. I think growth has slowed for many of them as well. And you're seeing that reflected in those valuations.
So it's not all roses. Have you asked anyone about this or put this to anyone in any of these interviews? Or
yeah, I did. I was speaking to the co-founder of a company called SumUp. You might have seen their little sort of point sales terminals. Yeah. So he was saying, look, there was a lot of VC money around, and they were paying high multiples for a lot of these companies, high valuations, and a lot of them weren't profitable. And now the time is, a lot of them were quite flashy, a lot of marketing spend. Now the time has come to kind of really show those who can survive downturns. And that's what he was sort of saying, that VCs had a lot of money paying high valuations. Some of that growth hasn't quite materialized. And some of those, that sort of hype has come out of the market. And that's what's led to that big decline.
Okay. All right. Well, safe travels back. Enjoy tomorrow and the rest of Money 2020. For our listeners, if you could go and please follow and subscribe. If you enjoyed the show, then do that. Thank you, Arjun.
Thank you, Tom.
We'll be back next week for another episode of Beyond the Valley. Goodbye.
Beyond the Valley.